we look at what's been fascinating listening through this discussion this morning is the sort of Africa unique challenges and Africa unique solutions that we've heard around mini grids, around new opportunities that exist in e-mobility, in agriculture, in energy. And this is obviously centers around the key theme of what we're discussing today. Just a reminder, the questions are open, so please do ask. Is Made for Africa, innovative business models for growth, jobs, and sustainable future. Matthew, perhaps I'd like to sort of start off with you, and what we've listened to today, it talks of varying constraints and unique constraints, whether it be infrastructure, network industry, or a lack of quality in network industries. The challenges and the constraints are endless, but you're seeing innovation leapfrog that. What are you thinking about, when you think about innovators turning those constraints into growth and accelerating that in sectors like e-mobility, agriculture, energy? What are the local solutions that you think about a lot?
Cool. I think it's important to sort of set the scene as well. So like 2/3 of global emissions will come from emerging markets if they continue to grow at the rate that they're growing. So it is important to decarbonize the West, but at the same time, I think this climate battle will be won or lost within our markets. So it's not about replacing fossil fuels, it's about enabling this growth without them. So with these sort of business models, the technology exists, the costs have come down, there is a tipping point that has been reached where a lot of these solutions are more affordable for the people in our markets. So that business model innovation piece, I think, becomes quite important. Over the last 2 years, we've looked at probably 500 companies, and I think there's sort of 4 things that stand out for me within this innovation piece that's really interesting. So affordability through structure, so innovative models, pay-as-you-go, subscription models, battery swapping models is interesting. So in the e-mobility space, batteries make up 40% of the cost of the vehicle. Take that out, the vehicle's already 40% more affordable, and then the swapping versus sort of filling up with fuel on a total cost of ownership is already more attractive. The second sort of piece is this embedded finance piece. So if you look at the Western world, credit scoring's like pretty advanced. Our markets, it doesn't exist. So innovative models to kind of look at or build a credit score for our consumers and then allow them to take a loan to kind of purchase these products. The next piece would be on local distribution networks. So these innovation business models that allow that last mile distribution, which is really difficult in Africa, needs to be present as well. And then that makes those models quite scalable and relevant. And then lastly, on value. So the customer at the end of the day needs to see value. And a lot of these innovative business models focus on increasing the income for the end consumer or saving them costs. If you can kind of tick those 4 pieces in that business model innovation piece, then
would you say that's the sort of recipe for success in the market, in thinking about how products need to scale to a unique African market?
Well, that's kind of the investment thesis that we overlay from our...
Which you can say is the benchmark if you want.
Yeah.
So, and again, colleagues, please, this is an open discussion, so please do not wait for me to prompt you. If I can just move over to Gareth, and one of the things we heard early on this morning was Africa's fiscal challenges. We know that debt, as it is in many developed markets, but debt in Africa has been a challenge to overcome, and rising debt has meant that fiscuses are more constrained than they were before. The knock-on impact is that investment from government is going to slow, if we look over time, likely slow across all sorts of industries, in healthcare, in logistics, at the same time, we've also know that, and South Africa is a great example of this broken government that is not functioning effectively. Now, in that gap, the private sector has really jumped in and started to think of solutions. First question, do you think that this is a sustainable model for driving new innovative business or driving growth in businesses or in innovative businesses?
Look, I think you've got to think about it from a different perspective because all of what you say is true.
Yeah.
And we run first world businesses in a very developing market economy, as we do in our business. We're in about 6 different countries across Southern Africa. And every one of them is different, and every one of them has got a fiscal problem, and every one of them has got broken government. So how do you do it? And I think the best example is Zimbabwe, where we run an incredible business in Zimbabwe, but it's done without government.
Yeah.
And I think that's what we're seeing more and more of happening, is that businesses having to step in and take a role. And if you listen to the previous discussion, which I was listening to about sustainable electricity, and you look at all the wonderful things, for example, that Woolworths were doing and putting up their stores, and we do all the same stuff. But the problem is you cannot do it with an infrastructure that we have.
Yeah.
The average person in Southern Africa can't afford electricity anymore. It's got too expensive. Water's not working. The potholes are so huge that it's driving the cost of the supply chain up. And you push the cost of supply chain up, you get the increased emissions, you get the damage to the infrastructure, all of which works negatively against the economy. So how do you actually get that to work? Is the real challenge. And it's more about less government, allowing government to facilitate the policy framework and let business fix it. I think India is moving more and more to that. And the huge numbers of highways and railways that they're putting up every single day, it's done with government facilitation, but very much private enterprise. And we've got to move in Africa away from government trying to fix things, because they can't. Set the framework and let business do it for them, because it can happen that way. And it can be done sustainably at the same time.
I mean, just quickly, I want to just touch on the sustainable. Is this a sustainable business model? I mean, we talk about the challenges faced with potholes and the increased cost of the supply chain. That's something that should not be a cost that private business should have to constantly bear, right? Do you think that, do you think this is a sustainable model? What do you think is going to remain as sustainable and a accepted private sector role, and versus what then needs to move back into government's mandate?
People,
because I agree to a degree. I absolutely agree that, private sector does need to step in, but at what point does private sector say, or what point is it fair to expect private sector to build a road because they want to access avocados to bring to the supermarket type of thing?
But then you put a toll onto it, to use that as a very simple example. But the point is slightly different. I think that you've got to look at it that people have to eat. The role of the food industry is to get food to the people as cheaply as possible and have the right quality food, safe food. And that's got to be your starting point.
Yeah.
And if you don't start from that point, you can put wonderful stores down, you can put great refrigeration down, and we do it as well. But it still comes down to, can people afford to eat? We have done some work around this, and so the average employed person in South Africa feeds 10 mouths.
Yeah.
And on the size of the salaries that people are earning, they can't afford it. And you're just seeing the people trading down all the time. And it's going to get to a point which then becomes socially unacceptable.
Yeah.
You see there was some stuff in the media this morning about that, where people are saying you're facing social unrest.
Yeah.
We saw it in Durban a couple of years ago, where you had this huge unrest. And a lot of that was because of the cost of food, the unavailability of food. And it becomes a huge social imperative. There's a hierarchy of needs. And government's job is to make sure that there's food security and food safety.
Yeah.
That the food is there and it's safe. And that you've got the infrastructure to be able to get it to the people. We don't ask them to get the food there themselves.
Yes.
But facilitate it. I was down in Johannesburg last week, and I drove on the main reef road. And I was absolutely horrified. I hadn't been down there for a while, down behind Westgate Mall. There was a pothole probably twice the width of this room, and it was full of water. And there were no signs anywhere, and the cars were going up the pothole. They saw they couldn't get through, so they were turning around and going back.
Yeah.
It made me about half an hour late for my meeting because of this. But the problem was, there's just no plan to fix that.
Yeah.
You know, we have stores burned down, but because there's no water in the pipes, and the fire brigades go on strike. And, you know, those are sort of issues that we have to deal with. And the consequence of that is insurance companies say they're not going to insure you because you haven't got the right water pressure. This is the challenge of doing business in Africa, and you've got to get around it.
Yeah, absolutely.
Just to,
And then I'm going to pass it.
I completely agree with everything you're saying. I think just two examples of like a business model innovation that we see in Africa where, you know, these challenges exist with like terrible roads. So a lot of the electric motorbikes need to be adapted for the local environment. So the technology exists, the costs have come down on the battery and the components, local assembly and tweaks to those bikes to enable deliveries on sort of roads that are dirt road versus tar, where they would be in like China, India, or here. And then the second one would be a lot of innovation on the cold chain piece. So again, in Kenya, where the fish is sort of fished and then transported to sort of the local markets in Nairobi, with that cold chain solar piece, making food safe. And
Arvana, you wanted to add, and then I'll ask my questions. Go ahead.
Sure. I think it also speaks to the pace of the actual repair. So if you use the example of there being a pothole on the road, how quickly is that repaired? And I think that's where the trade-offs come in terms of how much should private sector do versus public sector, because you can be waiting a long time for the environment to get more conducive, and then you've got to weigh up that opportunity cost.
Yes.
And I think that's what's driving a lot of decisions, and we work with corporates as well who have actually invested in the area around them in order to make sure that there is access coming into, whether it's a shopping mall or whether it's a development or whatever that may be.
Sure.
But the business case still stacks up for private sector to actually go and actually do some of that work, which government would have had to do. But I think there has to be a boundary in that, because else it just becomes an additional tax in the system for private sector.
Absolutely. I want to just talk on, we've spoken a little bit about innovative Africa Fit technology. You spoke about the battery as a service as one example. In your mind, I mean, you know, a lot of these have come from the constraints of income, constrained income or constrained infrastructure. Do you think that the pace of finance, and perhaps sustainable financing, is keeping track or allowing those businesses to scale? Are we there yet, or do you think work still needs to be done to ensure that businesses like battery as a service or the smaller and micro enterprises are able to scale a lot quicker?
So I think definitely there's been a lot more pools of liquidity that have become available to support the sustainability imperative and objective to the extent that it qualifies. We've seen most of the banks in South Africa increase and put together targets towards financing sustainable development activities. As Nedbank, we have financed over 180 billion rand of sustainable finance activities and growing.
Yes.
And it's certainly a concerted effort in a world of finite capital in terms of guiding your capital allocation decisions. Whether that's going to be enough, I think we've seen the numbers in terms of the Sustainable Development Goal gap, and that's into the trillions. And I think it's just around being more innovative in the financing that we actually structure. And that's where we've now started to build in sustainability key performance indicators into our financing, where we're also encouraging our clients to further stretch their sustainability journeys and really think through other types of CapEx spend and other sustainability projects and initiatives that can ultimately be measured and ultimately also support them from a financing rate point of view as well.
Sure. Okay. And what do you think is, I mean, just as a follow-up, where do you think this will evolve to over the next decade, given where we find ourselves in 2025? What is going to accelerate that, and what is going to act as a pothole, if you will?
Sure. Look, I think the economics of sustainability makes a lot of sense.
Okay.
And having sustainability at the heart of your business case will favor you in the sense of all things being equal. You could become a more attractive investment, and you can attract more foreign direct investment. I mean, if you look at the case of Morocco, where clean energy and affordable clean energy is located near industrial capacity, that has had the effect of accelerating job creation. And ultimately, we want to be able to, job creation is required and decent job creation to get those income levels there and income levels higher. And that has the second round effects in the economy of actually having the ability to spend and bring in the disposable income. So I think really, if you look at where the costs of solar have gone to, I think it's about $0.043 per kilowatt hour. Cost of onshore wind now at 0.034 kilowatt hour.
Yeah.
I mean, this really stacks up. We spoke about especially in a South African context, the above inflation increases that are stemming from the traditional power sources, and that then really starts becoming, from a payback period, a lot more attractive to invest in this. And that becomes your business case upon which your foundation is built to power your agricultural sector or your mobility sector, et cetera, et cetera.
Sure. Okay. I want to talk a little bit about the sort of embedding sustainability into your practices in a bit. But I see we have a discussion, a question from the audience for Mr. Gareth Ackman. You've spoken to the core issue that food insecurity is the core of our perpetual poverty cycle. How is Pick n Pay addressing this in an innovative manner?
Well, I think we work with our suppliers to put a lot of different products and work in those areas. But I'll use a very specific example. We've developed a second chain called Boxer, and Boxer is designed to deal at more entry-level communities in South Africa. But within that Boxer, we've got a very effective meat factory. And one of the real problems is to provide cheap protein to people in South Africa. And we've just developed a whole range of products through the meat factory to actually bring the protein content, to give people protein content in an affordable manner. So it's using soya, it's using different meat derivative, not meat derivative products, meat products, but maybe some MDM, those type of things to get the price down.
Yeah.
And that's just one small example that you work. But you could go through a number of other industries that we have done stuff in. But protein is the primary one where I think we really need to make it.
And I mean, how have you found the collaboration? How have you found the buy-in from the value chain or supply chain as a critical success factor to this?
That factory today is the second or third largest meat factory in South Africa. So the answer is it's been pretty well accepted. And we've now moved some of that product, and we're looking at how do we bring some of that product into our Pick n Pay side of the business, because there's an absolute need for that there as well.
Yeah. Matthew, I see you have one also directed to you, and that is that financial framework applicable / effective for emerging technologies that have no track record in new business models or developing markets? The one that you mentioned a little bit.
Perfect, yeah. So no, I think it's important to note again, the emerging technologies are generally expensive and unproven. So the technology already exists for a lot of these solutions, which is established, the costs have come down, and there's a green discount. In the past, these emerging technologies have a green premium.
Yeah.
But the sort of incumbent clean tech has a green discount. So in our markets in Africa, affordability and cost is everything. So if the green discount exists and you look at something and say a total cost of ownership, it's a natural inclination for someone to take that up because they either make more money or save money.
Yeah.
Then mixed in with those like business model innovations which make it even more affordable or easier to access, then that solution becomes applicable. And I think, yeah, it's obviously being built from the ground up. So in rural areas, there's no electricity. The solar technology exists. Battery technology exists. You have your innovative business model, and then it's scalable and very adoptable.
So if I could just put there, I think there was a case study maybe 20 years ago when we were looking in the retail industry, and it was Walmart and how they actually really got into the sustainability. And they drove it on one fundamental principle, and that was, how does it reduce our cost? The problem with a lot of technologies and a lot of the issues, and particularly when you're in a fine margin business, is that it adds to your cost and makes you less competitive. And for example, they took toys as an example. And the box of toys coming out of China, they said it's got to be 20% cheaper. And you follow that right through the whole supply chain. The cost saving was tens of millions of dollars just by making the boxes of toys 20% smaller. And I think that's the way we need to look at sustainability, supply chain cost, and how do you get it more efficient, rather than saying throwing everything out and starting again.
Yeah.
Yeah, and it has to be fit for purpose, right? And the ecosystem thinking along that whole value chain is critical. And even in that, there will be trade-offs.
Yeah.
And I think, we need progress over perfection at this point on where we are in the journey. But if you can make those small changes, and, one of the examples with some of the agricultural producers that they're basically engaging in climate smart agriculture and capex spend around shade netting on effectively helping to protect their crops in the case of climate change. A very small intervention, but it has really positive spin-offs in terms of the yield, productivity, et cetera, et cetera. I think also important on the innovation agenda is equally important is the transparency and accountability around that.
Yeah.
Because there's many times that, we speak about innovation or there's, this intervention has been done, but what is the actual measurable behind that? How transparent is it? And how accountable have we held ourselves to the actual output of what the innovation was intended to do from the beginning?
If I can ask, just talking about cost savings and cost savings in businesses with no track record or a technology with no proven track record, and please, this is an open question for my whole panel. Are you finding that, are you finding that there is an appetite for financing or cost saving when scale is perhaps absent in disruptive or innovative technologies in Africa? What are your thoughts on that, where scale isn't present, where those scale wins will take 5, 10, 20 years?
Yeah. So I think that's where impact investors and developmental finance institutions play a role. And really their role is that of catalytic to help support new greenfields industries.
Sure.
And actually bring in that credit enhancement in a structure, whether that be via a first loss piece, a subordinated piece, or longer tenor. And that then helps the rest of the commercial funders ultimately get comfortable in the capital stack and come in at a later stage. But there are certainly pockets of liquidity that have come about for that. I think, a lot of that is in foreign currency, and that then becomes another challenge for Africa in the sense that a lot of that is typically in US dollars or euro, but there have been some pools of liquidity that have been able to come into local currency. Yeah.
And what sort of sustainability KPIs then become important for tracking and this audience, this to sort of link this comes from our audience. What type of sustainability KPIs are the banks tracking across their funding projects?
So I think definitely emissions reduced, so from a mitigation standpoint, and that's largely because a lot of funders have also committed to net zero, and they're also measuring their financed emissions, which is ultimately their scope 3 emissions, which is the biggest part of the emissions of a financier. So really important to be able to, for their clients to also transition along with them, because their investors, banks being big intermediaries, are attracting foreign investors as well. So emissions, also more social KPIs is what we're interested in, number of jobs created, sustainable job creation, and that's where the infrastructure projects are very valuable, and especially those projects which have 2-year construction period, but 20 years continuing into, a long time. So that's securing jobs, but also having transferability of skills.
Yeah.
As well as governance. Governance KPIs is also, a lot more relevant depending on the context you're operating in.
You look at technologies that have changed, and I just see the one question is disruptive type technologies.
I was going to ask that next.
But the question is, which is just to follow on, is it's got to be passed on to the end user, the cost, the savings. And look, a very good example is, for example, I pick up my phone and I just tap it. It's that whole Apple Pay, the tap and go type technologies.
Yeah.
But it's not being translated yet into cost reductions for the consumer or the user to bring the cost of transactions down. And that needs to happen. Another very good example is around solar panels in shopping centers. Now, if you're a tenant in a shopping center and they put their solar panels on the roof and you pay them so much a kilowatt hour, they can't wait for Eskom to push the price up because they get a better margin off their technology. So they're getting a better return, but they're not passing it on to the other things. And I think that is the thinking that we need to get through into business, is pass it on and drive the cost of doing business down. By doing that, you actually are then going to create more sustainability, and you're going to create more jobs, you're going to create more wealth within the communities.
Your thoughts, Matthew?
No, I agree with everyone. I think on that, the question about the disruption technologies as well, I think these new business models are fueling a wave of entrepreneurial sort of activity in Africa as well. So it's got to make sense from an economic perspective for people to switch to those technologies, but they can also enable them to earn income. So again, I think battery swapping is a perfect example of this. The bike is cheaper, big gig economy of deliveries and sort of transporting passengers. So the cost of the vehicle is cheaper, the battery swapping is cheaper, but also that innovation in that model increases uptime. So the drivers don't need to go and or trickle charge their bikes. It's a 1-minute swap and they can be on the road, which enables them to earn more money. So yeah, there's the cost saving and then the income potential that's like kind of being driven by these innovative models at the moment.
I want to ask just another question from the audience. How is the impact and dependency on nature being considered in your operations? And perhaps Mr. Ackman and Arvana, this is for you. How are you monitoring it? How are you evaluating it? Do you think that there needs, with a future focus, do you think we need to change our thinking and perhaps place greater emphasis? I know we spoke about water security earlier. Do you think that there needs to be a widening focus as we move forward?
I think we need to look at the impacts of climate change. They are already having big effects at the moment. Sure. But the counter has been technology changes. So, for example, look what's happening to farming, where you've got drone technologies and you've got these huge, big commercial farms producing product a lot cheaper. Yeah. And getting the cost of food down. But then you have to use GMO, and you still have the issues around GMO. And so you've got all these technologies which are going to be coming in. But you have to look at the nature, and you have to look at the effects on the total ecosystem. Yeah. You can't just have monoculture because that's going to destroy the environment. So you've got to make sure you get that balance coming through.
Would you say we're not at a stage where our focus is too narrow?
No, I think it's the agricultural sector understands this, I think, extremely well, and the investment and into the technology and the way things are moving. I think it's pretty well understood. It's a case of educating the consumer better. It's educating government better as to how you can use the new technology to get the cost of production down.
Yeah, and I think balance is the key, right? We're in a consumption-driven economy, and we are going to need to grow, and we're going to need to basically extract from the environment to be able to feed people. But on the other side, we also have a food wastage problem. So yes. I think that there's a lot more that can be done in that ecosystem to ultimately enable us to not maybe extract as much from the environment. From a nature point of view, I mean, nature is a carbon sink, and it is biodiversity, and it certainly does help also offset your carbon footprint. So it is a carbon credit in a way, if we think about nature in that manner. And ultimately, it is about healthier living spaces and effectively all overarching well-being, and therefore we have sustainable precincts that have come about, as opposed to just developing a piece of infrastructure and industrializing. Let's do it in harmony with nature. Yes. And it's definitely that's come mainstream now into our agenda. We put out a nature position statement last year, and we are looking at ways that we can innovate our products, our service, our advice in order to incorporate nature. And I think, coming back to the point that nature is being monetized, I think we heard some comments earlier as well from our Minister of DFFE, and effectively natural capital accounting is evolving as well. Yes. And being able to understand, put a value to nature, but obviously use that responsibly, I think that's becoming mainstream quite quickly.
Perhaps last question, because we are almost at lunch. Matthew, do you agree with this? Do you foresee any risk as technologies that we've discussed, not just in our panel now, but throughout the morning, do you believe that there is an appropriate view over which technologies are going to sort of butt against sustainability as they scale? And how are you thinking about that? How are you communicating that?
Yeah, so again, I think the emerging technologies from a investment perspective we watch, but the costs haven't come down yet. And the technologies that we look to invest, which are more established, will continue to sort of have a cost down. So we do look at the sort of competing technologies that are coming in, but I think it's important to recognize that developed world and the developing world are quite different and have different kind of needs. And yeah, to my first statement, I think Western world is about switching from fossil fuel, whereas developed markets can build from the ground up with these new technologies.
Correct.
So
Absolutely.
it's slightly different, nuanced, yeah.
I like that, and I think that's a fantastic way to sort of finish our session. So thank you very much, and if we can give our panel a warm round of applause.